Kun Onganan, we have another person to share his perspective on the Asian stocks. On the line with us, we have Mr. Manu Bhaskaran, who is the regional analyst and partner of Centennial Group in Singapore. Good afternoon, Mr. Manu.
Hello. Hi.
Yes, Kun Manu, can you please clarify some of the sentiments toward the heavy sell-off yesterday and a little bit of the rebound this morning?
I think markets and investors generally remain very fragile. The rebound is because of expectations that the Europeans will come up with a credible package, and if that comes true, then I think markets will continue to rally for a while. However, we shouldn't forget that the main driver of the market corrections that we've been seeing for the last couple of weeks was not just the European crisis, but also the slowdown in global economic activity. And whatever happens with the European debt package, we will see a further slowdown in Europe, and we will probably see a further slowdown in the United States as well, and that will be negative for Asian markets.
Would you say the sell-offs that we have seen in the past days are the direct impact from the European economic crisis?
Yes, because the implications of a failure to prevent a Greek default could be quite troubling. So the hope is that there will be a package out of Europe, because the financial shocks that will come out if there is no proper way of managing the Greek sovereign debt problem, the implications would be just unimaginable for the rest of the world.
Okay, we've been talking to the SCB earlier, and Kun Kietisak said that it could be a panic mode for investors to pull out the fund. So what is the prospects toward the year end for the Asian markets?
A lot will depend on, first, whether the European package does come through and whether it is then actually passed by the different European legislatures and implemented properly. The second factor will be the trajectory of global growth and demand, which I think will be negative. The third factor will be whether there will be problems starting to emerge within Asia itself, because the very complacent assumption of investors everywhere is that somehow Asia will ride through the storm because Asia is not somehow affected by the European debt crisis and so on. But we also have considerable imbalances and weaknesses in all our economies, excessively easy monetary conditions in some, overheating considerations in others. So if the slowdown in the global economy triggers off other problems in Asia, then that will be negative for all our markets.
Mr. Manu, from your own perspective, are the Thai stocks still attractive at the moment?
All emerging markets are considered risky assets by global investors. So whether their fundamentals are good or not, and in Thailand's case, the longer-term fundamentals remain very good, but it may not matter, because when global investors become very risk-averse, they will pull funds out of all markets without discriminating. And so whether the fundamentals are good or not in Thailand, the fact of the matter is that Thai stocks may still come under selling pressure.
Well, thank you very much, Mr. Manu, for sharing with us today.
Thank you very much. Thailand's baht snapped a 4-day drop on speculation exporters will take advantage of the currency's decline to a one-year low to convert income at a more favorable exchange rate. The MSCI Asia Pacific Index of regional shares rose on optimism European leaders will act to contain the region's debt crisis. Policymakers at the European Central Bank are likely to debate restarting covered bond purchases, a Euro region central bank official said, on condition of anonymity. We can expect exporter demand toward the month end, said Toru Nishihama, a Tokyo-based economist at Daiichi Life Research Institute, Inc. The stock market rally is supporting sentiment, but the baht may remain under pressure due to risk aversion. The baht gained 0.3% to 31.04 per dollar as of this morning in Bangkok after touching 31.22 earlier, the weakest level since September 2010. The currency has dropped 3.5% this month and 0.9% this quarter. The baht may slide toward 31.50 by the end of this week, Nishihama said. Government bonds gained for a second day. The yield on the 5.25% notes due May 2014 declined 1 basis point or 0.01 percentage point to 3.58%.
Asian stocks rebounded from their lowest level since May last year as the bankers rallied amid speculation that European lenders may find a way to tame the region's credit crisis. Sumitomo Mitsui Financial Group Inc., Japan's #2 bank by market value, advanced 2% in Tokyo after the European Central Bank was said to be considering restarting covered bond purchases and further measures to ease monetary conditions. Canon Inc., the camera maker which depends on Europe for about a third of its sale, rose 2.1%. BHP Billiton Limited, the world's biggest mining company and Australia's largest oil producer, jumped 2.3% in Sydney after crude and copper prices advanced. A strategist at Tokyo-based SMBC Friend Securities Co., Fumiyuki Nakanichi, said speculation that Europe may take additional monetary easing measures will likely boost shares. The MSCI Asia Pacific Index climbed 1.5% to 110.65 as of 9:30 a.m. in Tokyo, its first advance in 4 days. The measure slumped 7.1% last week, the most in almost 3 years, as concern grew that the global economy is heading for a recession. Japan's Nikkei 225 stock average rose 1.7% in Tokyo. South Korea's Kospi index jumped 3.4%. Australia's S&P ASX 200 index gained 2.2% in Sydney. The Thai stock market staged a rebound this morning as well to regain some lost ground after the panic sell-off on Black Monday. The SET index surged 27 points or almost 3% to 931 during the early trade this morning, with a gain of 426 stocks and a loss of 46 stocks, while 58 stocks remain unchanged. The SET index plummeted 5.7%, the most in 3 years, following a region-wide sell-off of equities on concern of the regional economic outlook and European debt crisis.
Gold futures advanced for the first time in 5 days as the biggest 3-day drop since 1983 encouraged purchases by investors seeking a store of value amid turmoil in global financial markets. December delivery bullion rose as much as 2.4% to $1,633.30 an ounce in New York, before trading at $1,630.50. Futures tumbled 11.8% in the previous 3 days, the largest such drop in 28 years. Immediate delivery gold was little changed at $1,628.72 an ounce after slumping 9.8% in the last 4 days on optimism European officials will come up with a plan to stem the region's debt crisis. The European Central Bank is likely to debate restarting covered bond purchases and may discuss interest rate cuts to ease funding strains, a Euro region central bank official said. Policymakers are under pressure to halt the 18-month European debt crisis that has Greece on the brink of default and threatens to tip the global economic back into recession. From a fundamental point of view of a partner at Silver Arrow Capital Management, the dollar and treasuries are no better than the sovereign debt in Europe. The source said it is now a great opportunity to accumulate more gold and silver. Silver futures climbed for the first day in 4, trading back above $30 an ounce. December delivery silver gained as much as 2.8% to $30.81 an ounce after dropping to an 11-month low of $26.15 yesterday. Cash silver was little changed at $30.67 an ounce.